Hi, good morning, friends. I would like to bring to your knowledge a company called Focus Lighting and Fixtures. It has got an order of 71 lakh rupees from the Gandhinagar Municipal Corporation. It has a 3-year maintenance contract and 2 years contract for updating and installing fixtures in the premises. More details, we'll go through some details. The company is listed on the SME NSE exchange. It was listed as the NSE Merge platform. It was listed on 13th of April 2017. The face value of the issue price was 10 rupees and it was being offered at 45 rupees. However, the company's face value has now been reduced to 2, and the initial listing price that shows up on the records is 10 rupees and 80 paise, which means it was a premium listing of about 10-11%. So we'll continue. This is the average for today. We can see that the last 5 days the company has lost almost 17% value. Over the last 1 month, 17%, 18%. Last 6 months, around 6%. Overall, since the listing, it is up 412 times. We'll go further. This is one of the company's brands, Plus Light Tech. Then Feel Light. These are the three brands that you can see that the company has. One is called Trix, the other is Plus Light Tech, and the other one is LNB Lumes and Beyond. So these are some of the pictures taken from the internet to showcase the kind of products that the company is dealing with. This is one of the exhibitions that was held abroad, away from India. Focus on light. Then this again is another it's like an exhibition, focus on light. Moving on, this is the company logo. These are the three brands, as I said, Trix, Plus Light Tech, and Lumes and Beyond. This is some of the analysis done. Uh, it's effective capital utilization to generate profit. It's improving year on year, especially in the last 2 years. Then this is the current scenario of today. 160,000 shares traded, 20-day moving average, 20-day moving volume of 11 lakhs 48,358. So it is shown as 1,148,358 shares. So in Indian terms and volumes that we are used to, it's 11 lakhs 48,000. 20-day average delivery 121,516. Then sector P 78, book value is 21, PC is 19. So let's move on. So these are the moving day averages: 5 days 93, 10 days 97, 20 days 99, 50 days 115, 100 days 120, 200 days 128. So the stock has been falling gradually. One of the reasons that I have noticed is that the sales have been inconsistent, or the revenue has been inconsistent in the last 2 years. There was a growth in 2022. Thereon, since then, it's struggling to uh, generate growth, though the sales are fluctuating a little bit up and here and there, but the company is still getting a reasonable amount of profit. So one of the things that you can look into is see the volume of shares traded on a 1 month average. You can see about 2 lakh 200,000 shares Then you can see negative returns in the month of February is a seasonal business that the company is affected by. Year to date, you can see 56% erosion in the stock value, something that, as I said, is related to the uh, overpricing of the stock. Over the last 1 year, the company uh, had uh, had a good bull run, and thereafter you see a large correction in the stock because of the inconsistent performance with regards to revenue. Profit is more or less steady, however, not meeting the market expectations, which is the reason why the value is eroding constantly. So it seems like there should be some sort of stability which would derive future. So one of the important things that comes to my mind here is that since there is a tax revision for individuals and people will have little more excess cash to use for consumption, you could see higher spending on consumer vehicles, retail and consumer goods. So the company is supplying maybe fixtures to Tata Motors, then they have Mercedes, BMW, some other international brands. So from the local business point of view, Tata Motors would seem to benefit from this, and they are likely to get a higher business and revenue from from the future. So this is something that you need to keep a focus on. Uh, as I said, between quarters, the sales keep fluctuating. You can see 44 crores sales in September quarter, June quarter 55 crores, and you can see comparison. It's fluctuating up and down here, so it's not very steady, which is the reason why the stock price is on a downward trend. If you see a little bit more stability in the business revenue and little more business that the company is able to generate in the next maybe 2 or 3 quarters, then possibly you will see the company start adding and gaining momentum again. So something to keep a watch on. The current price is around 85, 87, which is a very good value for the stock. As you said, the book value is not very high as such, but still you can see at the end of the day, uh, this is something you can consider for a long-term investment perspective. The price is not very expensive, so if you have other brands which may be doing better, but you can see the valuations being very expensive, and holding a large volume of money into such a stock uh, is something that blocks a person's capital. So on a return perspective, it's giving a good return. Dividend yield is about 56 per share, which is 56 paisa per share compared to the stock of value of 2 rupees. So this is one of the forum screenshots I've taken. They've suggested 100% buy, and this is something that was available on the internet through moneycontrol.com. So you can have a look, you can consult an broker or an advisor for more information. So I thought that this is a good value add company to hold in your portfolio, which is the reason why I have made a little bit of analysis and information gathering for you. So you can see here 71 lakh 61,000 order, and this is the update that's been updated uh, through the exchange yesterday. So a little bit more information if you want to read through it. That's it from my side, friends. Thank you for watching. I'll try to bring another stock with more information so you can gather some news and consider uh, other stocks if you like the information shared. Thank you. Have a great day. We'll catch up again soon. Thank you.